It took us 5 months, but we finally found another big winner. Hi everyone, my name is Michael Lamott. I'm the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And in this video series, I'm walking you through step by step every single trade we took in 2017 that allowed us to triple the return of the S&P 500 in 2017. So we generated about a 60% return, and I want you to know step by step how we did that so that way you could do the same in 2018 and beyond. So the next trade that we had was Caterpillar, ticker symbol CAT. We entered right here on June 16th, 2017, and we set a stop loss of $194. So about a little under 6% from our stop. So we entered up here and the initial stop was set down there. Now this is one of the only times I've seen an advanced entry point actually be above the classic pivot. Let me explain. So what Adam was seeing when he was managing the model portfolio, Adam Sarhan manages the model portfolio and I'm just following along trade for trade. What he did was he saw that this was the classic pivot, right? So you have this pattern here, basically a flat base that's roughly, let's see, how deep is this base? This base is about, why isn't this working? So this base is about 8% deep. And so what he saw when this was forming, first he saw this big gap up, right? A big gap up, huge volume, did it on earnings, great. Now it's starting to chop around and trade sideways. You get this little bit of a shakeout below the 21-day exponential moving average. That's the purple line right there. And at this point, when it was first starting to break out, you still have the 50-day moving average way down here. And so if you wanted to buy this breakout, the real support level is still way down here. We want support levels to be as close to our entry point as possible. That's really what's creating, a big part of what's creating the advanced entry point system, where you're entering as close to a logical area of support as possible. And so if the trade doesn't work, you want to be out in a hurry and you want it to make sense to exit based on what the chart is telling us. So over here, when he finally did enter, you were able to have a much closer level of support down here, because now the 50-day moving average has caught up, right? And you also have this little bit of a move over here, so you have multiple layers of potential support that you're breaking through if you're going to exit, and that's the whole point of advanced entry points. So we got in on this day, June 16th, and immediately you start to see a little bit of choppiness, but well, we're still in, it hasn't stopped us out yet. So a few weeks later, and we get to earnings, and the stop is still way down here, right? Adam hasn't moved up his stop yet, so we're playing earnings, and we're at about break even. These are some of the things that you need to do in a leading stock in order to go and make these big gains. But you don't want to just play earnings on any old stock, and if you don't have a cushion, that's part of it, but it's not the whole equation. Part of what the equation is too is it a leading stock? Yes, Caterpillar's a leading stock. At the time, let's just zoom out a little bit. At the time that Caterpillar was breaking out, it was making 52-week highs. That in itself is the definition of a leading stock. We also look at the relative strength line. The relative strength line was at new highs. This down here, relative strength line. Also looking at the weekly chart, And we're back here, and you could see that it's still making 52-week highs on that weekly chart as well. So you have the relative strength outperforming the market. So this is showing us that Caterpillar is a leader. It's not only making 52-week highs itself, it's also beating the rest of the market. So based on relative strength, based on it being a leader, and based on the overall conditions of the market, let's just bring up the S&P 500 at the time. You're still in this very, very strong bull market, and so all those elements played into a factor of, yes, okay, this is something that we want to hold through earnings, and we also want to say, well, where is our stop now relative to where price action is? So let's go back to Caterpillar. And so heading into earnings, our stop is down here. So now we have the 50-day moving average and we have the 100-day moving average. So that's major, major support. So if Caterpillar were to roll over and not perform, then this is, that's like a real spot where it would be time to say, okay, call it quits, right? So goal is to stick with it over the longer term, over the intermediate term. So we stuck it through earnings, and then we get this tremendous move, and it just keeps on running and running and running. And you could see that this is that line right there. It's getting support at that line, which is the 21-day exponential moving average. The strongest stocks in the market will typically get support right around the 21-day exponential moving average. That's per this book that I read called Monster Stocks by, I believe the author's name is John Boik. I'll put it down in the description, but fantastic book, definitely worth reading it. And yeah, historically, many of the biggest winners in the market, when they broke out, they didn't just get support at the 50-day moving average. They were also getting support at the 21-day exponential moving average for a longer period of time. And that's exactly what you were seeing here with Caterpillar. So we're sticking along with Caterpillar, and we're only raising the stop up as additional layers of support are being built. So the first time that you really get another layer of support is when Caterpillar gaps up again on earnings, and at that point, let's see, how much were we up on this position by then? By then, we're up about 28-30% on this trade. All right, so then you get this gap up, and you get a little bit of a sideways consolidation. All right, so there is the new ceiling, and down here becomes the new floor right when Caterpillar finally breaks out. You don't have the floor established until you actually get the move above the ceiling. So if you're thinking of this like a building, and this is the ceiling, then this becomes the floor, and this floor is only established after you create the new floors above it. So what we ended up doing, or what Adam really ended up doing, we stuck with this, and this exit is still way down here, right? The stop loss that he has set is still way down here at presently $133.71. So just below this for this entire move up, right? So from this point, that's a pretty big gain. That's sitting through or giving back a 27% gain from our stop way down here. So far from the ultimate peak to the drawdown that we've seen over the past couple of weeks, which was pretty nasty, we've seen almost an 18% drawdown in this position. Now, if you're somebody that is a shorter term swing trader, then it's going to be extremely hard to sit through that kind of a move, that kind of a base, or this basing pattern, or pullback, or whatever you want to call it. It's knowing the time frame that you're dealing with and knowing what it is that you're trying to accomplish and how you're going to try to manage risk and how this fits into the overall bigger picture. And for Caterpillar, it's still a leading stock, right? It's still making 52-week high after 52-week high after 52-week high. Yes, long overdue for a pullback, right? So it broke out of that. Then it's following this line up, right? And that line is the 5-day exponential moving average, right? So most stocks, if they're getting support at the 5-day exponential moving average, that is super, super strong. It's also something that's not going to be sustainable for that long. And it actually sustained it from December through the end of January, right? So seeing a pullback was going to be inevitable. Did we know that it would be this much? No, but this is still going to be a strong move unless if it breaks down below support, which is still way down here, right? Go back to the 3 strikes rule that we had in that other video. You want to see a break of a key moving average. You kind of have that here with the 50-day moving average. You arguably got support at that 100-day moving average. Then after that, you want to look for a trend line. So let's draw a trend line and see where that would fall. Right, so pick a spot, and there's lots of ways to draw trend lines. This is just one way. You could arguably say that it broke a trend right over there, so you would be getting a break of both the trend line and the 50-day moving average, but support is way down here, right? So only got 2 strikes. Maybe you're scaling out of a position at this point and you're still holding on to something because you didn't get that 3rd strike yet. But for this model portfolio that Adam built, it's to make it real easy to follow. All it does is it enters the full position in one shot. So it entered the full position way back here, and it's going to exit the full position on that 3rd strike, so way down here. In order to have big gains in the stock market, what I've learned from Adam and by watching the model portfolio and what it's done is that you have to be able to sit through moves like this if you're going to be playing on that intermediate to longer term level. And it's kind of freeing because it only takes me about 5 minutes to review the model portfolio, see what orders there are, if there's any orders for the week, see if there's any updates to existing positions, and then just go into the broker and enter those. And just following along that week to week to week only takes about 5 minutes, and it was able to generate a 60% return last year. And I think that that's a great way to not only learn how to hold through some of these positions, because I do have a significant amount of market experience myself, but we are always constantly learning and evolving, and I'm sure that I'll still be learning and evolving well into the next decade and 2 decades and all the way until like I'm ready to call it quits on the market, which will probably be when I'm completely incapacitated or on my deathbed. But this is... You're constantly learning, you're constantly growing, and there's always something new to learn. And the way that we're going to learn is by surrounding ourselves with people that are further ahead than we are. So I'm able to learn quite a bit from Adam by following along with the model portfolio, and it also allows me to enjoy the ride of the model portfolio to the tune of tripling the S&P 500 last year. So that's how we've done so far. We're still in this one. We're still in this one today. Thankfully, we did not get stopped out on that move, so we saw a rebound of about 10, 12% so far. That's pretty good. We'll see what happens in the future. For now, that's it. I want to say thank you so much for watching this video. If you have any questions on anything I said at all, please leave them in the comment section below and I will personally help you. Also, if you like this video, click on that thumbs up button. That's really going to help us out a lot. And also make sure that you subscribe to the channel so that way you get every single update. Thanks again for watching, and I'll see you again in the next video. Take care and have a great day.